Have you ever had that nagging feeling that the more good news we hear about Bitcoin, the more the price seems to stay exactly where the big banks want it? It is early 2026, and we have seen Bitcoin reach incredible heights. Yet many investors are still staring at their screens, wondering why the explosive growth we were promised feels like it is being held back by an invisible hand. You might remember back in late 2024, when Bitcoin first crossed $100,000, and everyone thought the sky was the limit. Since then, the institutional adoption has become a reality, with massive exchange-traded funds holding millions of coins, and corporations adding it to their balance sheets. But if the demand is so high and the supply is so limited, why does the price action often feel like a calculated dance rather than a free market? Today, we are going to pull back the curtain on a legal loophole that major financial institutions are using right now to suppress the price of Bitcoin and manipulate the market to their advantage. This is not a conspiracy theory, but a cold, hard look at the mechanics of modern financial warfare in this digital age. Before we dive into the deep numbers and the history that is repeating itself before our eyes, please take a moment to hit the like button and subscribe to the channel. Your support helps us continue to bring you these deep dive analyses into the truths that the mainstream media often overlooks. Also, please share your thoughts in the comment section below about whether you feel the current market is being manipulated or if this is just natural volatility. To understand what is happening in 2026, we have to look back at a story from 1982 that changed the world of international finance forever. In the early 80s, the nation of Mexico found itself in a trap that seemed like a great opportunity at first. They borrowed billions of dollars from international banks to build infrastructure and grow their economy. But there was a catch that many overlooked. That debt was not in Mexican pesos, but in United States dollars. Mexico does not control the United States dollar. They cannot print it, and they can only earn it by selling their resources or borrowing more. When the Federal Reserve raised interest rates to fight inflation, Mexico's debt payments exploded overnight. The dollar got stronger, their own currency got weaker, and suddenly they owed $80 billion with no way to pay it back. The International Monetary Fund stepped in with a rescue package, but it came with strings that effectively stripped the country of its financial sovereignty. They had to privatize state companies and open their markets to foreign banks at a massive discount. This was the birth of the modern debt spiral, a weaponized financial structure designed to force a proud nation to sell its assets for pennies on the dollar. But this pattern did not start in the 80s. It goes back even further to the fall of the Ottoman Empire. In the 19th century, the Ottoman Empire began borrowing heavily from European powers to modernize their military and infrastructure. They entered a cycle where they had to take out new loans just to pay the interest on the old ones. Eventually, the European powers established the Ottoman Public Debt Administration, which gave foreign creditors direct control over the empire's tax revenues. They literally took control of the country's income because the empire was trapped in a debt structure they could no longer manage. Now, you might be asking what a 40-year-old debt crisis in Mexico, or the fall of an empire, has to do with your Bitcoin portfolio today. The answer is everything. Because the same playbook is being used against the largest corporate holder of Bitcoin in the world, MicroStrategy. Under the leadership of Michael Saylor, MicroStrategy has become a leveraged Bitcoin fund disguised as a software company. As of early 2026, they hold over 450,000 Bitcoin, a staggering amount worth tens of billions of dollars. To buy all that Bitcoin, they did not just use their profits. They used a sophisticated form of debt. Specifically, they issued billions of dollars in convertible bonds and preferred shares. This is where the loophole begins to widen, and where the sharks and the big investment banks start to circle their prey. Think of it like this. Imagine you own a beautiful home worth $500,000. You take out a massive loan against that house to buy even more property, assuming the market will only go up forever. As long as the market rises, you look like a genius because your wealth is growing faster than your debt obligations. But the moment the market stalls or interest rates rise, the bank starts looking closely at your ability to pay. If you cannot make the payments, The bank does not just want your cash. They want the underlying asset, which is your house. And they want to buy it from you when you are most desperate, at a price that favors them, not you. MicroStrategy currently faces an obligation to pay hundreds of millions of dollars every year just to service the interest on their debt and their dividends. Their actual software business only generates a fraction of that amount in free cash flow. This means they are constantly relying on their cash reserves, or their ability to sell more stock to keep the operation running. In the professional world of finance, this creates something called a premium to net asset value. This means the stock market values MicroStrategy for significantly more than the Bitcoin it actually owns. As long as that premium exists, the company can keep raising money to buy more Bitcoin. It is a beautiful flywheel that works perfectly when the sun is shining and the market is bullish. But the big banks have realized that if they can break that premium, they can trigger a devastating death spiral. If the stock price of MicroStrategy drops below the value of the Bitcoin they hold, the company loses its ability to raise cheap capital. Suddenly, those 24 months of cash reserves start to look like a very short window of survival. When a company is under that kind of pressure, the banks know that eventually someone has to sell their assets to stay afloat. But the banks do not want MicroStrategy to sell their Bitcoin on the open market, where everyone can buy it and drive the price up. They want what is called a block trade, a hidden transaction away from the eyes of retail investors. A block trade is a private transaction where a massive amount of an asset is sold all at once, usually at a significant discount to the market price. If the banks can push MicroStrategy into a corner where they must sell Bitcoin to cover their debt, the banks will be there to buy it for 20% or 30% off. This is the ultimate prize for the institutions that missed the boat in 2024 and 2025 and are now desperate to accumulate. They want the asset, but they do not want to pay the retail price that you and I have to pay on the public exchanges. To make this happen, they use a strategy called convertible arbitrage, which is a sophisticated form of market manipulation. Hedge funds buy the convertible bonds of MicroStrategy, which gives them a safe return. But then they immediately short the company's stock. This short selling creates massive downward pressure on the stock price, which in turn creates fear in the broader Bitcoin market. Because MicroStrategy is so closely tied to Bitcoin, when their stock drops, people assume that Bitcoin itself is in trouble. This is a self-fulfilling prophecy designed by the brightest minds on Wall Street to extract value from the global financial system. They are not breaking any laws. They are simply exploiting the incentives of the debt structure that MicroStrategy chose to adopt. We have seen this happen before in the early 2000s with something called floorless convertibles. Back then, struggling companies would take loans from hedge funds, where the debt was paid back in stock instead of cash. The lower the stock price went, the more shares the hedge fund received as payment. This gave the lenders a direct and powerful financial incentive to destroy the company's stock price. By pushing the price down, they could own the entire business for next to nothing, while the original shareholders were wiped out. The Securities and Exchange Commission investigated these deals and found that they destroyed nearly half of the companies that dared to use them. While MicroStrategy's debt is not exactly the same, the psychological pressure on the market is identical to those historical cases. The banks are publishing research reports saying the stock is overvalued, while simultaneously taking positions that ensure the price falls. They are telling the public to be afraid while they are preparing their own bags to catch the falling knives at the bottom. In this year of 2026, the psychological warfare has only become more sophisticated and harder to detect for the average person. The constant flow of news about regulatory crackdowns or institutional concerns is often just cover for these large-scale accumulation plays. If you are a long-term holder of Bitcoin, you must understand that the price you see on your screen is often a reflection of these high-level financial games. Bitcoin is a decentralized, scarce, digital asset that no central bank can print and no government can truly control. MicroStrategy, on the other hand, is a centralized corporation with a complex and risky balance sheet that depends on market sentiment. It is vital for your financial health that you do not confuse the two different entities. If MicroStrategy struggles or is forced to liquidate some of its holdings, It does not mean the technology of Bitcoin has failed. It simply means that a specific leveraged bet by a single corporation did not pay off the way the leadership intended. The banks want you to panic sell because your panic is the direct source of their profit. Every time a retail investor sells their Bitcoin at $90,000 out of fear, an institutional buyer is there to take it and hold it for the long term. They are playing a game of decades and generations, while they want you to play a game of minutes and hours. This brings us to a critical crossroad in your investment journey that will define your financial future. Are you going to be the one who provides cheap liquidity for the banks? Or are you going to be the one who understands the game and stays the course? History shows us that real wealth is not made by following the herd or reacting emotionally to every negative headline. Wealth is made by understanding the underlying mechanics of the system and having the discipline to wait out the manipulation. Think back to the gold market in the late 90s, when central banks were dumping their reserves at the absolute bottom of the market. The private banks were the ones buying that gold, and they made fortunes over the next 20 years, while the public was told gold was a useless relic. The same thing is happening right now with Bitcoin in 2026, but the scale is even larger. The pressure being applied to MicroStrategy and the price of Bitcoin is the loudest signal of how badly the institutions want to own this asset. They would not spend billions of dollars on short attacks and complex debt structures if they thought Bitcoin was going to zero. You do not waste resources attacking something that has no value. You simply ignore worthless assets. The very fact that we are seeing this level of sophisticated financial warfare is the ultimate proof of Bitcoin's critical importance. As we move further into 2026, you should expect the volatility to continue and the headlines to become even more dramatic and frightening. The countdown clocks on debt expirations and cash reserves will be used as psychological triggers to keep you on the edge of your seat. But you must remember the math. Bitcoin's supply is mathematically fixed at 21 million, and the global debasement of currency is only accelerating. The fundamental thesis for owning Bitcoin has never been stronger, regardless of the fate of any single corporation or its stock price. Before we conclude this deep dive, please remember to hit the like button if you found this information valuable. Subscribe to the channel so you can stay informed about the hidden mechanics of the financial world as they unfold in 2026. We also want to hear from you. Do you think Michael Saylor's strategy will ultimately succeed? Or are the banks too powerful to stop? Please leave a comment below and share your perspective with the community. To protect yourself in this high-stakes environment, there are a few practical steps you should consider immediately. First, if you own Bitcoin, consider moving it off of centralized exchanges and into a cold storage wallet where you have total control of your keys. This prevents your own assets from being lent out and used by the very banks that are trying to short the market against you. Second, avoid over-leveraging your own investment position, as high debt makes you vulnerable to short-term price swings. Manipulation is designed to wipe out people who are using too much debt, just like it is being used against large corporations. Third, continue to educate yourself on the history of international finance and the ways that debt has been used as a geopolitical weapon. The more you understand the playbook of the big financial institutions, the less power they have over your emotions and your decision-making. We are living through a historic transition in the way the entire world views, stores, and transfers value. This transition was never going to be easy, smooth, or without intense conflict between the old system and the new. The institutions that have controlled the global financial system for centuries are not going to surrender their power quietly. They will use every legal loophole, every regulatory hurdle, and every psychological trick in the book to maintain their dominance. But the beauty of Bitcoin is that it provides a mathematical exit from that system for anyone with the courage to take it. You are not just an investor in a digital asset. You are a participant in a global movement toward individual financial sovereignty. Do not let the short-term noise and manufactured drama of 2026 distract you from the long-term reality of what we are building together. Stay patient, stay informed, and most importantly, stay in the game until the mission is complete. Thank you for watching, And make sure to subscribe so you do not miss our next update on the evolving world of finance and technology. The truth is out there, but you have to be willing to look past the surface and the propaganda to find it. We will see you in the next video.